Welcome back to Ferocious Education. This is Zed. Today I'm going to be talking about a different ticker here, ACST. Haven't done this one before, so it's going to be a little bit of a long video. I'll cover everything I can and I can find. I've broken this video into due diligence technical analysis. If you would like to skip to technical analysis or due diligence, you'll find in the description below, in the comment pin down below where you can find it. Let's jump right into it. ACST. So this one here is a pharma based on research. There's two different research parts where TRILOGY phase 1 and 2, and I do cover it right here. Basically, the study was designed to provide at least 90% power to detect a difference at least at 20% increase in TRILOGY steroids between CaPre and placebo. And then you had TRILOGY 1, which had a different perspective in here. It was related to the primary endpoint of identical trials to determine the efficacy of CaPre 4 grams daily compared to a placebo in lowering TG levels after 12 months. A little bit too technical, but cut it short, the study itself have failed. And so they reported their top line TRILOGY results from phase 3 TRILOGY 2 study, the CaPre in patients with severe hypertriglyceridemia. That is a tough word for me, but nonetheless, there wasn't much significance between the two. So compared to their baseline levels, the observed levels of reduction among patients taking CaPre were similar or larger than seen with prior omega-3 therapies. And so it doesn't really show any much difference from the placebos. And they do actually mention it right here. The company's two phase 3 trials, designated as TRILOGY 1 and 2, were designed to evaluate the efficacy and safety, blah, 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 and respectively, and neither TRILOGY 1 nor 2 independently reached statistical significance, and therefore did not meet their primary endpoint for lowering the levels. Although there was a reduction in one of the largest seen among its previously conducted studies, but the company will not file an NDA for FDA for patients with severe levels of that. So really what it is, they have their eggs in two different baskets, and they both failed, which was TRILOGY 1 and TRILOGY 2. And so now comes the question into what happens next. Of course, the price plummeted, news came on, some Wall Street backers backed out, or some ones that were back in this company backed out, and things were rough. Now, in terms of compliance, they are way sub $1, and they do have until May 10th, 2021. Honestly, compliance on a reverse split is not what we're actually looking for. Now, the main thing here is that the corporation's compensation decisions are typically determined in the end of the fiscal year after review, etc. This is the executive summary. It basically says compensation were designed to retain, motivate key employees, protect the corporation's future potential while preserving cash in near term. What you might actually see is massive compensations. If you start seeing those, that might actually say either one of two things. Either, again, just bankrupt or sell out. And buyout is not a bad idea. Now, the next thing here is relating to the massive jump that we've seen recently. Really massive jump on one. I believe it jumped from 24 cents all the way. So it was almost 100%. They released a pre-art providing an update on strategic process. It continues to explore and evaluate a range of strategic alternatives to enhance shareholder values with the assistance of its financial advisors. The company's board of directors and management team, working with advisors, plan to proceed in a timely, orderly manner, but have not set a definitive timetable for completion of this process. In connection with the execution of its business plan, the company may seek to raise additional capital through a variety of resources, including the public equity market, which is offering private equity financing, which is almost direct offering and also financing strategies, collaborative arrangement or strategic financing, banks and investors, existing at the market program, or public and private debt. There can be no assurance of a successful outcome for these efforts or the form of timing of any such outcome. So they're actually restructuring and trying to figure out a way where they can benefit all the stock sense. And that is something massive for me that says, hey, they're not giving up, they're trying. Now, that was on December 4th. Now, in the recent jump, here's what I'm talking about. They released PR saying that they are not aware of any recent changes. Right here, wishes to confirm that the company's management and board of directors are unaware of any material changes in the company operations that would account of the recent market activity. They basically looked around for market activity and was like, we're not sure why you guys are buying us. But it's always a funny thing when you actually see that from companies. Are you guys okay? Are you sure you're not confusing us with someone? It's nothing to worry people. But one of the things that this one has massive on is the massive rumors of buyout. And buyout is possible for this. For reason is that, well, they have files, they have data. Data might be useful for another company. Now, the next big thing here is, well, what about the assets, the equipment, and everything? Can there be a buyout? Now, it could be that they would sell their assets, in that sense, liquidate and give their investors a specific amount of dollars, say 10 cents on a share, or whatever it is, 50 cents, a dollar, still don't know. But that seems to be somewhere off the plan. Either buyout or perhaps dissolve the entire company, give the investors back some portion of their money. Now, in terms of having a whole different study, that is a little bit unlikely, but still a possibility. So we already covered the main things. The next thing coming up is their evaluation. Price over book is $3.39. And so if they were to give book value, you'd be going somewhere around 10 cents per share. So a buyout might be, let's say, 20 cents per share. That sounds reasonable for me if I was to buy this company based on their book value. But again, stock market doesn't really work that way sometimes. And I'll say, I'll let the rumors slide away, and I'm not really focused on the rumors. Now, revenue, of course, they don't have any revenue. They've been piling debt. Net income has been negative and negative because they are pharma. And one of the main things they do is they raise their money from investors, private equity, and public offering. So in terms of their total assets, if you were to look at, let's say, the balance sheet here, their total cash here, they're running low. Of course they would run. Total assets around 16 million. Now, is it worth it? Well, let's take a quick look. Out of that 16 million, total cash is around 14 million, or cash equivalent. That means around less than 2 million, around 1.8 million of assets in there. That goes to, let's say, gross property, plant, and equipment is around 3.25 million. And yeah, someone just might come in and buy that 3.25 million in terms of their entire equipment, rather than having to go on and buy a market cap at 30 million. Now, if they were to give them the money for assets and equipment, it is at 10% of the market cap currently. So if you were to count 10%, it's 3 cents per share. Now we are at 31 cents. So that is some risk analysis you would kind of consider in terms of buyout. Now, if the buyout is generous and 3 times as much as the equipment and assets and property value, you're probably going around 9 cents. That is still around, multiple less than what it actually is. 31 to 9 cents. That is a massive around 300 something percent. So moving on. We're moving on towards now the technical analysis. Now, in case you haven't actually subscribed to this channel, I know a lot of you amazing folks have been watching this channel here. Please make sure to subscribe because it helps put my channel on other people's radar. Turn notifications on. And if you like, you can join our Discord that is free in the description below. We just communicate about different stocks all day. There's not pumping or anything like that. It's more of a chat room. Feel free to join. Now, technical analysis here. On the 1 week perspective, what we get to see are things a little bit bearish. Moving averages look bearish. ADX is floppy. MACD looks like it actually stabilizing a little. And momentum looks positive. Those two things are the only things that are positive about it. It gives you a little bit of hope that this one might actually see a little bit new highs. Well, I mean, in the short term. Now, ADX here is almost around 50. That's where negative reversals might hit. So that's a little bit off. Volume percent R is oversold. And MACD is retracting again. That is dangerous. The retraction on the MACD is really dangerous. Moving averages are thinly bullish until it hits the 20. Moving averages in general are somewhat bullish. And the momentum here, you get to see it's almost retracting, clinching above the 0. Now, on a 2-hour perspective, things look a little bit rougher. It looks like it's going on down. It's below the moving average, trading action zone, rushing down below the what would be considered a positive or a bullish moving averages. So things look a lot rougher. ADX shows ACD is increasingly negative. Momentum is going negative, so that doesn't look good. Moving average band is expected to trade 32 on the top, 20 and 26 on the bottom. That's just for the sake of the argument. Both the stochastic fast and stochastic slow are both pinpointing is a potential for another leg up, although you need to consider perhaps the supports and resistance. Significant resistances on the Fibonacci retracements is 35, 47, 56, 66, and 79. Now, if we were to look into a price line action point, you get to see that the current support sits at 31 cents, and that's a significant support. Below there, we're looking at 20. There, we're looking at 22 cents and then 20 cents. Significant resistances, we're looking up at 35 cents. And then from there on, we're looking at 42. Then from there on, we're looking 47 and then 49. So, and what do you think about this one? It's definitely a hard one because we're going to restructure. And honestly, one or two things that I think are going to happen. It's either they're going to dilute, or sorry, they're going to basically liquidate, and they're going to give a certain amount of dollars for all the shareholders. With property and equipment around 3 million, and somewhere around total cash is around 14 million, you're probably looking at a combination of 17 million for what a market cap is 30. You're probably looking at 10 cents per share if they do that. Now, a buyout, if they were to look just to get the property equipments, probably looking at 10% of the current share, or 10% of the market cap, without, for instance, the cash. You're probably looking, okay, you know what, I'll calculate the cash. You're probably looking at 9 cents per share. If you don't include the cash in and just property and equipment, you're looking at about 3 cents per share. They were generous, 6 cents per share. So in that sense, you can sense that, okay, it is a little bit higher. Price over book is 3. So that means around 10 cents per share is considered the book value, which is what we calculated in general. So a buyout, or if they were to liquidate and give you your money, somewhat of money, you're probably looking somewhere around 10 cents, if you're lucky 20 cents. But a buyout, is it likely? There could be a possibility because the data itself could be used for something else. Now, would I buy this and leave it? Well, I'm going to show you one single thing. And you can get to see if you were to buy, let's say, somewhere around $1.46, you're right now at 31 cents. If you were to buy it last year, around this same time, you would have bought it somewhere 6, and right now it's 31. I wouldn't hold this one. Would I trade it? Sure. The volume, I can scalp. I can go long on a volume. Yeah, I would do. But investing, this one is a. What do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like. You have a wonderful